Thursday, February 16th, market analysis, Stan Ehrlich, and we had a little bit of bearish news this morning, caused the market to open 4 or 5 points lower, which is a pretty healthy lower opening. And on the left side of your screen, you can see that the market opened in the neighborhood on the S&P 500, which I always start with, around 409 to 408.50 or so. But soon it established a low, a bottom, and started climbing. We have now been up to 413 almost, currently 412 on a little bit of a dip. This is great. The market has held, and you got questions? info@ersignals.com. Email me at info, ersignals.com. On the daily data chart on the right, we opened around the lows of the day before yesterday, which was Tuesday, and Monday's low, which is approximately equal to Friday's high and the close on last Friday. Some support. It held right away on the opening. And look at the gains we have made. Currently, 10 o'clock California time. So there's still 3 hours left to the trading day, a little bit past the midpoint. And I really like what I see. I am not going to be surprised if this market closes around unchanged to maybe even higher on the day. Boy, should that stick a pin in its rear end and start something rallying really well. But we have to see that happen first. Maybe I'm asking for too much. Maybe not. So obviously, I am looking for the perpetuation of this great head and shoulder bottom that's working outstandingly well so far. The first shoulder low is in June, the October 13th, October lows. It's a seasonal tendency. It happens about 90% of the time, give or take a little, over the last 30 years or so. And this last year, last October, it was the October 13th. And wow, what a great reversal. Huge bullish engulfing, oversold conditions, and an ER automated buy signal I did get. So I'm a happy camper since October. The last shoulder low was a little bit sooner than I expected, and it was a little bit higher than I expected, but that is good sign for a strong bull move. And that's pretty much what we've got so far. Now, we have crossed the 200-day Dow Theorist long-term investor type moving average. We have crossed over and above the major long-term bear trend line starting from the early January date throughout 2022, the one-year bear market that we had, past tense, in my opinion. And we have crossed over the neckline, which is the highest of the three lines, and had a downside retracement testing the line, popped right back above it again into new high ground on February 2nd, got overbought. So a correction was in order, which it did have, and we are now climbing back again. It's Thursday. If we close pretty damn good, better about where we are, even a little bit lower is pretty good, or anything stronger than this, especially if it's above Tuesday's high for the week, then we probably will see upside follow through by the end of the day, if it's not tomorrow. And maybe tomorrow we'll see a new high for the whole trend. DIA has broken a major bear trend line, but it did not hold on Tuesday's rally, closing a little below it, dipped back down again, tried to come back, and then this morning we had that setback. It made it a new low for the previous 3 days, but nothing terrible. A big sideways, basically pennant formation has developed as the last shoulder low extended a bit for the large head and shoulder bottom, and we also have in the DIA. Now the head of the formation is a double bottom in itself, and both the spider and the DIA had a head and shoulder bottom for the first shoulder low. That means you've got patterns inside of patterns, which is not uncommon, especially when you have a 6-7 month top or bottom formation, which is pretty large. That's getting up there. Now, we need to break the bear trend line at the top of this pennant formation, which is very close. Not even a new high for the week will do the job, but that'll be great if we make a new high for the week. And if you do that, you're making a new high for a couple of months since early December. And if you do that, you're breaking out of the pennant formation. And if you do that, you're starting to rally up toward the neckline, which is upward slanted in this case. And I just put little white dots on it as to highlight the neckline. So really breaking above 351 is the beginning of this head and shoulder bottom blast off. The DIA is way behind everything else. But if you look at interest rates and what they do to these different groups, indexes, and well-financed, medium and low, and so on, it makes sense. I'm not an economist. I'm not going to go there with that kind of detail. Now, the QQQs are doing great. They have broken out of their head and shoulder bottoms and major long-term bear trend lines first, rallied up more, a larger percentage of the minimum upside objective. The head and shoulder bottom is still there for the Qs, although the last shoulder is a little lower than I would have expected and a little bit sooner in time. It's still working great. All the body parts are there. They're all working just fine. So I'm thinking that within a few days, and it could be tomorrow, we may see a new high for the whole darn trend here. And you know, if that happens, we're going to see new highs since August. Yep, on the QQQ. August, September, October, November, December, January, February. That's 6 months, half a year. That's great. Long-term perpetuation, long-term bull market starting. I believe, in my opinion, we have started the bull market of 2023. For the S&P 500, the minimum upside objective is equal to historic highs. Not for the Qs, but that was for the S&P. The minimum upside objective for the Qs is 347, and I did say minimum the third time. It could go a lot farther. I've seen these patterns produce moves that are 2, 3, 4, 5 times. Or I don't know, a lot more than just the minimum. Obviously, it took longer. And let's go to futures. So I will start with corn for a change. It tried to break its major bear trend line, which has several points on it. So it's a well-established bear trend line. And I think it's going to break it, but it failed on Tuesday to do that. Even though it got through it a little bit, it closed lower and then sagged back yesterday, and it's sagging back a little bit today. But nothing serious. No major support levels are broken. No major trend lines are broken. Nothing, no bearish indications to speak of. It's just a very, very large pennant formation trying to break out to the upside. Next chart. That was corn. This is the E-mini 500, S&P 500. Of course, everything I've said for the S&P SPY goes for the ES, the E-mini, the electronic S&P. So I'm looking for, and it already has an outside trading range, hopefully a higher close. Even if it closed lower, I wouldn't particularly trust it bearish engulfing. It's not an official ER sell signal or buy signal one way or the other. The RSI is in the middle ground here, 57. And it's nowhere near overbought or oversold. So there's plenty of elbow room, frankly, in both directions. But obviously the trend has started to become up. We have made new highs for many months. We are seeing higher highs and higher lows, and that's the basic definition of a trend, uptrend. So I like what I see on a spider. I meant on the E-mini, which is the same thing, basically. Next, I'm looking at 10-year notes. We're getting oversold for the third day. Don't go short here. I think we're about to bottom out and turn back up again. We have a minor new low today, since mid-November. I do believe that we are in the process of forming a large bottom formation of some sort. Don't have a good handle on what it is going to be, if you can give it a name in the first place. But I will say that closing above the highs for the last couple of months is going to be very bullish for the 10-year notes. And you know something, the bond chart, like this chart right here, the 30-year long bond, is the same kind of commentary. significant resistance at 133 almost, and closing above 133 should start another significant leg to the upside. In the meantime, it could dribble down a bit more, but now it's oversold. Excuse me, and that implies it's about to turn up very, very soon. Next, platinum. We caught the top of the market to the exact day, and that is why the ER signal strategy was built. It's taken me about 11 years now to refine this. So oversold conditions, no, don't go short. Look for reasons to be a buyer. We made a new low today. It's well into a trading range support area for platinum, and it could easily bounce back up to about 980, 83, maybe 984, maybe in the next week to 2 weeks at the most. Next chart, heating oil. Now this is particularly profound for crude oil and heating oil. Look at this huge sideways price range that we have been in for many months going back to April. That is darn close to a year. If we start making lows and closing at 2.27 or lower, which isn't too far away, and I think it may happen, we have a huge long-term, very bearish breakout that probably will cause the market to come down toward 1.0, a dollar, or whatever the number is, 1.0000000. Doesn't really matter. I'm a technician. I look at the way the markets move and judge how much higher, how lower, how quickly, etc. Time and price are the only two things that count. My strategy, the ER signals, got the high of the rally on January 24th. We also sold short extremely close to the highest high for the last year and a half, or maybe even a lot more than that. I don't know. And we got the top of the market way back on June 17th. There's a few other great signals in there, and of course a few that didn't work, and we'd never take a big loss. I can't say never, that probably is an illegal phrase, but I used to have a license for about 35 years or so. Commodity futures broker's license, also a stockbroker's license, also the president of a forex trading firm. I own my own IB, blah, blah, blah. So I can now say what I want pretty much because I don't have a license, but I'm not going to, overdo it. It should be extremely bearish. I do think it's going to happen. It's going to take another several weeks. Let's see what goes. Now, crude oil, same kind of commentary, but we're already in a major long-term bear trend. We already have made new lows since, well, frankly, a year ago and maybe 13, 14 months ago. So I think this is going to make another set of new lows soon. We got a sell signal about the high of the rally, not quite. We did sell the top of the market way back there on June 14th. Although I may not have a tremendous number of signals on daily data charts, many of them are profound. I mean, the top to the day for months to come, if not months before. We also picked the bottom of the market way back on August 23rd. Next chart. Gold, we sold on the top of the market. The ER sell signal popped up, a red bearish engulfing in overbought or recent overbought conditions, and down we go. Now, we had a false buy signal a couple of days ago, so that was a bit of a twitch that's too bad, but the trend is still down, and I still think this market has more downside potential, but momentarily we are oversold. That happens all the time in up and down trends. Usually all that does is provide a minor bounce one way or the other and not a trend change. But extreme overbought or oversold conditions can and do often cause a trend change. And when I say trend, I mean probably for a month or two or more. And especially if they include a red ER sell signal on the top of the market like we got on February 2nd of 23, and on the first low of a triple bottom on September 28th of 22. Next chart. Natural gas. Of course, we got the top of the market on August 23. What can I say? And it dropped from 10.5 or actually 11 all the way down to 2.4. Yep. All right. So got very, very oversold very often over the last month, slowly coming down even more and more and more. And finally, it looks like it's found an equilibrium. And now it's been going sideways for about a week or so. It's supposed to rally somewhat, but it doesn't seem to want to do it. We could get a little upside breakout maybe, and then it would be a little more convincing that you're going to see more rally, more follow through. But that's not happening so far. So the other side of the coin is it could start to collapse again. Next chart, live hogs. No, not too much to say. And I think I'm going to stop there because the rest of these charts don't have really a lot to offer. I've added cotton. One of my subscribers asked me to add cotton. I didn't have it, so here it is. Not particularly great signals, although that one was fantastic. July 15th, the bottom of the market. And it did form a double shoulder, head and shoulder top, which of course is past tense a long time ago. March, April, May, June of 22, last spring and summer. So that's it. Have a great, profitable trading day, and I'll talk to you tomorrow. Thank you for viewing.